Welcome back to Investing Talk podcast. Today, we're taking a deep dive into a company that's truly making waves in the medical AI space, Spectral AI.
Mm-hmm.
We've got a comprehensive stack of sources here, everything from detailed investment outlooks to granular risk assessments, all curated to help answer one crucial question for you. Is now a good time to consider buying Spectral AI?
And our mission, as always, is to cut through the noise, really extract the most important insights, and help you understand not just the what of the data, but the deeper why behind it.
Yeah, the context.
Exactly. We'll be exploring Spectral AI's innovative technology, its financial fundamentals, valuation challenges, technical market trends, and critically, those upcoming catalysts and significant risks that could really impact your decision.
And before we jump into the details of this fascinating deep dive, if you're finding these in-depth analyses valuable, please remember to subscribe, like this episode, maybe leave us a comment with your thoughts.
Yeah, we love hearing from you.
And consider supporting our work by buying us a coffee. It genuinely helps us continue to bring you these comprehensive breakdowns.
It really does.
All right, let's really unpack this company then. Spectral AI operates at, well, the cutting edge of AI-driven medical diagnostics. It's a rapidly growing field, sure, but what specifically are they bringing to the table that's getting so much attention, especially in a critical area like burn wound care?
Well, what's truly fascinating here is their specialization with the Deep View system. This isn't just, another AI tool out there.
Okay.
It's actually received an FDA breakthrough device designation. Now, that's not just some fancy label.
Right, what does that actually mean?
It means the FDA recognizes this technology as having the potential to provide a more effective diagnosis or treatment for, life-threatening or irreversibly debilitating conditions, and they fast-track its review.
Okay. So it signals the agency really believes in its potential.
Exactly. A strong belief it could significantly improve patient outcomes. And its clinical validations, particularly from the U.S. burn study, showed pretty impressive results. Specifically, a high sensitivity of 86.6% in accurately assessing burn wounds.
86.6% sensitivity. That's a standout number. But for our listener, what does that actually mean in the real world of burn care? Why is that specific metric such a potential game changer compared to how things are done now?
That's a crucial point, because traditionally, assessing burn depth, it's notoriously subjective. It often relies just on the physician's visual inspection, which can be, highly variable and prone to error.
Okay.
And misdiagnosing burn depth can have really severe consequences. If you undertreat, you might get delayed healing, increased infection risk, maybe unnecessary scarring, or even, amputation in worst cases.
Wow.
But if you overtreat, you could end up with unneeded surgeries or longer hospital stays. So that 86.6% sensitivity isn't just a statistic. It means Deep View is significantly reducing diagnostic errors. Errors that could literally save limbs, reduce long-term disability, and drastically improve recovery for patients. This level of objective, accurate assessment really sets them apart. The market needs better tools here.
That real-world impact certainly highlights the potential, yeah. Especially when you consider their strategic focus on getting that FDA clearance and then their plans for deployment in both military and civilian healthcare. That dual market approach seems, incredibly ambitious. Are there unique challenges or maybe advantages to hitting both sectors at once?
Oh, it's definitely ambitious, no question. But it also creates a much wider potential impact, right? For the military, rapid, accurate burn assessment is just critical on the battlefields. Timely, appropriate care saves lives and limbs.
Makes sense.
And the Department of Defense has actually been a key partner and funder, which helps de-risk some of their early development.
Okay, that's useful.
Then for civilian healthcare, Deep View addresses a huge need in emergency rooms and burn centers. The challenge, it lies in navigating two pretty distinct procurement and regulatory worlds.
Right, different systems entirely.
But if they pull it off, it offers diverse revenue streams and market validation from clients who are, frankly, very scrutinizing, so it provides broader impact and reduces reliance on just one market.
Okay, given that potentially groundbreaking tech, let's switch gears a bit. Let's look at the financial side of Spectral AI. When we dig into their fundamentals, what do the sources tell us about revenue and earnings right now? Are they actually profitable?
No. Currently, the company reports negative earnings per share.
Okay.
For example, their recent GAAP EPS, that's generally accepted accounting principles earnings per share, the standard way companies report profit.
Right, the standard measure.
It stood at approximately -$0.41, with forecasts around maybe -$2.14. So this clearly indicates they are not profitable yet. Not even close, really.
So firmly pre-revenue.
Absolutely. They're in that pre-revenue commercialization phase. However, with DeepView now awaiting FDA clearance, the anticipation is for first commercial revenues in the second half of 2025.
2025, okay.
So the financial picture right now, it's all about future potential and, significant investment in R&D and getting ready for market, not about current cash flow generation.
So yeah, profit margins aren't really a factor right now. Since there's no significant revenue, that implies they're burning through cash. What about their debt and cash flow situation? Do we know if the company is adequately funded for these ambitious plans, or are there concerns about their financial runway?
Well, detailed public data on specific debt levels or, free cash flow trends isn't widely available. That's often the case for these early stage companies.
Right.
But what we do know is they recently secured up to $5 million in fundraising.
Okay, $5 million?
Yeah, and that capital injection is pretty crucial right now. While it's typical for companies at this stage to raise capital, the timing and the amount, especially happening after the FDA submission.
Interesting timing.
It does indicate a degree of investor confidence in their near-term commercialization efforts. It gives them that essential operational runway to push towards FDA approval and that initial market entry.
So it's not necessarily a sign of distress, more like fueling the next stage.
Exactly. It helps bridge that gap until those hoped-for revenues start rolling in next year.
That's an important piece of the puzzle, but with no current profits, no consistent revenue, it brings up a fundamental question. How do we even begin to value a company like Spectral AI? What's its current market price and market cap, and how should investors look at those figures without the usual financial metrics?
Yeah, that's the tricky part. The current price is hovering around $2.70 and $2.80 per share. Market cap is approximately $70 million.
70 million, okay, small cap.
Definitely small cap. But as you rightly point out, traditional metrics like the price to earnings or PE ratio, completely meaningless here because earnings are negative.
Right, no E.
Exactly. And similarly, specific price to sales and price to book PB ratios aren't really available or meaningful because, again, they're pre-revenue. These metrics need established financial performance, which Spectral AI just doesn't have yet.
That's a really important distinction, especially for investors used to looking at more established companies. So what does this mean for standard valuation methods like, say, a discounted cash flow model, the ones that project future earnings way out? Can you reliably use those for Spectral AI?
Honestly, not really. Or at least they come with a huge asterisk of uncertainty. You can try, but the inputs are highly speculative. This stock behaves much more like an early-stage biotech or, a deep tech startup.
Okay.
Its valuation is overwhelmingly driven by these big, often make-or-break events, what we call binary events.
Like the FDA decision.
Exactly like the FDA approval.
Right.
And by very high growth expectations for when or if their product finally hits the market. You're essentially betting on the success of these future milestones and whether the market adopts their tech, not on current financials.
So it's about future potential, which is just inherently harder to pin down.
Much harder to quantify precisely, yeah.
Okay, shifting gears from fundamentals then, let's look at the market's pulse. Technical analysis. What has the recent price action looked like for Spectral AI? Has it been volatile? Is it showing a clear trend?
Well, the stock is traded in a pretty wide 52-week range, from about $0.82 on the low end up to $3.25.
Quite a range.
Yeah. And it's currently trading near the higher end of that, around that $2.70, $2.80 mark we mentioned. Daily trading volumes are around 313,000 shares.
Okay, what does that volume tell us? Moderate interest.
Moderate, yeah. It suggests there's activity, but it's certainly not high liquidity. Pretty common for small cap companies like this.
And what about its short-term trend and just overall volatility? Does it seem to be building momentum, or is it seeing big swings? And can we infer anything about support and resistance levels?
Well, recent gains, nearly 40% in a relatively short time frame, certainly suggests some bullish momentum.
40%? Wow.
Yeah, and this uptick is likely driven by the positive news we're about to discuss, things like the FDA submission and those strategic hires.
Okay.
Now, our sources don't give us detailed technical indicators like RSI or MCD. A seasoned trader would really want those to gauge if it's overbought or if the momentum's truly sustainable.
Right, the nitty-gritty technicals.
Exactly. Without them, we can broadly say volatility appears higher, which is, frankly, entirely consistent with a small-cap, early-stage medical device stock that depends heavily on specific catalysts.
Makes sense. High risk, high potential volatility.
Precisely. As for support and resistance, historical data suggests potential support might be found near that $2 level, which we saw in prior months.
Yeah.
Resistance could be near the recent highs, around $3.20. Those are key levels traders would likely be watching.
Okay. Beyond the charts and the balance sheets, what's really shaping the story for Spectral AI right now? What recent developments have been impacting its path and maybe driving some of this recent stock movement we've seen?
Yeah, connecting this to the bigger picture, there are several really key drivers. Most importantly, Spectral AI recently submitted its Deep View system for FDA clearance. Now, initially, it was a 510K submission.
Which is for devices similar to existing ones, right?
Exactly. Substantially equivalent. But, interestingly, they are now awaiting a de novo clearance decision.
Now, de novo, what's the difference?
It's a critical distinction. The de novo pathway is for completely novel devices where there's no existing comparable device on the market.
Yeah. So the FDA sees Deep View as genuinely innovative.
That's the implication. It potentially creates a whole new regulatory classification. Now, it might involve a higher bar for approval.
Potentially tougher review.
Potentially. But if successful, it establishes a much stronger competitive moat. Beyond that crucial regulatory piece, they have also appointed Stanley Meisk as their new chief operating officer.
Okay, new COO.
Which is a significant move. It signals they're strengthening their management team, which is vital for scaling up operations as they hopefully move towards commercialization.
Good point. Need the operational expertise.
And importantly, that $5 million financing we mentioned earlier, that significantly improves their balance sheet liquidity, gives them more runway, boosts investor confidence.
So the news flow seems definitely positive, especially with operations, finance, and that key regulatory shift to de novo all aligning. What about broader market sentiment? How are investors, the public, feeling about the company given all this?
Sentiment appears cautiously optimistic. I think that's the best way to put it.
Cautiously optimistic.
The positive clinical validation from that U.S. burn study, plus endorsements at various medical conferences that add significant credibility to their core technology.
Right. The science looks good.
Yeah. And you see this reflected somewhat on online investment forums, news platforms. Social sentiment reflects this cautious optimism, largely driven by the potential FDA approval as the main catalyst.
That's speculative.
Highly speculative. You have to remember, with no current revenue and the company's immediate future really resting on this single regulatory decision, the market is pricing in a lot of hope right now.
Yeah, that makes it a fascinating but definitely risky one to watch.
Absolutely.
Looking ahead then, what are the big upcoming catalysts, the things that could really move the stock price, both short-term and maybe longer-term? What should investors really keep an eye on?
Okay, the primary short-term catalyst, hands down, is that FDA de novo clearance decision, expected mid to late 2025.
The big one.
It's the classic make-or-break moment, a critical go-no-go milestone that could dramatically affect the stock price. We're talking potentially very large movement either way.
Yeah, a true binary event.
Exactly. Think of it as all or nothing for the immediate future. Long-term, assuming approval, we anticipate seeing their first commercial revenues in the second half of 2025. All right, that would be huge, transitioning them from pre-revenue.
A major inflection point.
Definitely. Beyond that, potential strategic partnerships or significant military and civilian healthcare deployments. Those would be major growth drivers and validation. And of course, just continued updates on market rollout, new clinical data, any further regulatory progress. Those will all serve as ongoing catalysts, providing news flow.
This obviously raises the flip side. What are the primary risk factors here? It sounds like there's incredible potential, but also a lot for investors to weigh up. Where do the biggest uncertainties lie?
There are several, and yeah, they're quite significant. First, company-specific risks. You've got the pre-revenue status, they're burning cash, no income stream yet, negative earnings with an uncertain path to profitability.
Okay.
Then there's that inherent binary risk of the single FDA approval for Deep View. If it's delayed or, worse, rejected, the impact would be severe.
Devastating, correct?
Likely. And related to that, their heavy reliance on just that one product. There's very little diversification if Deep View doesn't pan out as hoped.
Right, all eggs in one basket currently.
Pretty much. Then you have sector-specific risks. High competition in the AI medical diagnostics space generally. They need to carve out market share quickly post-approval, assuming they get it. Plus, the medical device regulatory environment is just notoriously complex, prone to unexpected delays, shifting requirements.
Bureaucracy.
You got it. Macroeconomic factors can also hit biomedical stocks hard.
Yeah.
They can be quite sensitive to broader market liquidity and overall investor risk appetite.
True.
And finally, remember that small market cap? around $70 million. That means the stock might have lower liquidity compared to larger companies.
So harder to buy and sell sometimes.
Potentially, yeah. It can lead to wider bid-ask spreads, meaning you might pay a bit more to buy, get a bit less when you sell, and just significant price volatility. Makes getting in and out trickier for traders. It's definitely a high-risk profile overall.
Okay, so after this really comprehensive deep dive, how does Spectral AI stack up according to our source's overall assessment? Let's run through those final ratings. For fundamental analysis, it scored a 4 out of 10.
Not great, reflecting the pre-revenue status.
Right. For valuation, a 3 out of 10.
Again, hard to value traditionally,
Technical analysis came in at a 6.
reflecting that recent positive momentum, but still volatile,
Recent news and sentiment scored a strong 7, and catalysts also a 7.
driven by the FDA submission and potential.
But, as we just discussed, risk was rated a sobering 3 out of 10.
Yeah, highlighting all those uncertainties we talked about.
So where does that leave us overall?
It leads to an overall final rating of 5 out of 10.
Right down the middle.
Exactly, which clearly indicates Spectral AI is an early-stage, high-risk medical AI stock. It has truly promising underlying technology, no doubt, but it's really only suitable for specific types of investors.
Who would that be?
Either short-term traders willing to speculate heavily on that upcoming FDA decision and crucially prepared to use very tight risk controls, or maybe long-term investors seeking high growth in AI medical diagnostics who can genuinely tolerate significant risk, potential illiquidity, and the possibility of substantial capital loss.
Not for the faint of heart, then.
Definitely not.
For those who are considering it, do our sources suggest any kind of entry strategy? Price points, risk management?
They do. They suggest a potential best entry price range might be between $2.20 and $2.50.
Okay, so a pullback from current levels.
Exactly. The thinking is a pullback offers a slightly better risk-reward profile. For traders, a strict stop loss, maybe around 15% below your entry, is strongly recommended. So for example, if you enter at $2.50, setting a stop loss near $2.10 helps limit potential downside.
Essential risk management.
Absolutely. And for those speculative traders looking for quicker gains, consider taking partial profits near maybe $3.50 to $4 if positive FDA news does trigger a strong rally. Market exuberance can create temporary spikes. Might be wise to lock in some gains.
Good advice.
But caution is absolutely advised here. Because of the lack of profitability, because of those huge make-or-break FDA outcomes, entering on dips, exercising extreme patience, and implementing strict risk management aren't just recommended.
They're essential.
They're essential for anyone even thinking about Spectral AI at this stage. It's a very high-stakes play on innovation.
So wrapping this up, what does this all mean for you, the listener? Spectral AI really represents a classic high-risk, high-reward opportunity. Its fate, at least in the near term, is tightly tied to the outcome of its DeepView system's FDA de novo clearance. It's just a fascinating example of how cutting-edge tech intersects with the often unpredictable world of investing, where future potential and these big regulatory milestones frequently dictate today's valuation much more than current financials do.
And this brings up a really important question, I think, that goes beyond just Spectral AI.
Yeah.
How do you personally assess the risk of investing in any pre-revenue high-tech company that has these major singular regulatory or development hurdles on the horizon?
Good question.
What specific questions would you ask yourself? Or what additional, maybe independent data would you seek out before committing your capital to that kind of venture? Think about how this deep dive into Spectral AI might inform your own approach to evaluating other emerging technologies and the unique challenges they present.
That's a great thought to leave our listeners with. Thank you for joining us on this deep dive into Spectral AI. We hope this comprehensive analysis has equipped you with some valuable insights.
Hope it was helpful.
Until next time, keep learning and keep asking the right questions.